Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very good day today. And in today's markets, guys, well, it was bound to happen. We got our first notable red day in roughly the last 10, 11 days of trading. Now, in terms of the red session here today, guys, it really wasn't largely data-based, right? We got a lot of economic data today, but none of it was truly that terrible. We got some initial jobless claims. Those came in pretty much in line with the expectation. We also got some manufacturing numbers as well. Those came in under the estimate, but still not extremely bad as the ones last month were. And then we also got some services PMI, which largely came in line with the expectations. So the drop did definitely not come from the data. Where did it then come from? Well, it happened to come from these two Fed members right here, Fed member Schmidt and Fed member Collins, both of them saying today that they didn't necessarily see a requirement to cut interest rates in the month of September. They are still pretty much waiting for more data. So obviously the market didn't quite like that, but tomorrow we get the big one coming out, and that is going to be Jackson Hole Symposium, where we have Jerome Powell commenting on the direction of interest rates. Tomorrow, Jerome Powell may give us a very big hint as to whether or not he is going to tip his hand towards the interest rate cuts in September, or whether or not he too requires more data. If he stays largely data dependent and doesn't comment on interest rates at all, and is adopts more of a hawkish tone when asked about those questions tomorrow, well, expect the market not to react pretty well. Now, Jerome Powell is largely expected, and the Federal Reserve too, to drop interest rates in September, but they've been very hesitant to actually say that out loud, word for word. So in the event that tomorrow he does say word for word that they are ready to cut in September, then the markets should respond quite well, because that is now the expectation. So that's pretty much everything for the market recap here, guys, today. In today's video, we are going to cover a few things together. Number one, going to be covering only one company earnings today, and that is going to be INTUIT. I know there was a lot of other companies today, but INTUIT is pretty much the most solid one out of the entire bunch, so I figured I should cover them principally right on the channel. Number two, we're going to go through our major technical analysis rundown of our major market indexes, and then our big tech names. See, with this current little dip, are there any dip buying opportunities, or should we perhaps wait? And then lastly, guys, go through my portfolio for the trades made today and the ones I have set for tomorrow as well. So without further ado, guys, a lot to cover today. Let's jump right into it. So SPY down 0.78%, QQQ down 1.6%, definitely leading the market to the downside. And a lot of that was due to the big semiconductor drawdown right here. As you can see, they were your market loss leaders for the day. Big tech also not having that good of a day, but the bottom half of the market was still relatively healthy. Financials and healthcare performing fairly well, and your more defensive sectors such as industrials and consumer defensives and even energy catching a little bit here today. So overall, the market was not entirely red, but the sheer weight that tech has really brought down the indexes more than anything else. On the one-day relative, you can see that even better, just a few sectors etching out some green gains on the day today, but to the downside led largely by technology and consumer cyclical, right? On the 1 week relative, guys, well, everything still remains positive, a bit less green than it was yesterday, of course, with energy being your loss leader to the downside, and now even technology slightly red for the week. So tomorrow, definitely a big day, gonna wrap up a very big week to say the least. So before we get into more technical analysis, guys, let's jump in right to our earnings call, and that is going to be for INTUIT. INTUIT, guys, if you don't know what they do, they are basically a software as a service company, and for the most part, they do a lot of different things in terms of helping small businesses and even medium and large size businesses either do cost analysis control or tax preparation as well, right? So they're kind of integrated into either customer billing, right? If you have a business and you want to see where all your bills are going and stuff like that, they have very, very good modeling software for that. And then they also have this whole tax suite of products such as TurboTax, which generates them a significant amount of money, guys. This company is another company that is in my high quality, high conviction list of stocks with return on capital employed and return on invested capital of over 15% per year, which is why the long-term chart pretty much looks something like this. They are a free cash flow monster, guys. So let's jump into some of their earnings and see whether or not they continue to crush it on the quarter. And they did, and they even increased guidance. So triple beat for INTUIT, double beat right here, beat on EPS by 7.5%, beat on revenue by about 3.22%, and this quarter wraps up their fiscal year as well. So they gave guidance into the next quarter and to the next year as a whole, and both of those guidance metrics were very, very strong. No surprise there for INTUIT. So let's jump right into it right away, shall we? No pun intended. Now, let's move into the earnings highlights right here. So as you can see from the CEO, right, we delivered very strong results from the fourth quarter and full year and made meaningful progress with our AI-driven expert platform strategy that positions the company for durable growth in the future. Yes, nowadays in 2024, guys, if you have a software company, you cannot deliver an earnings call without mentioning AI at least 36 times. That is the standard metric, of course, right? So in terms of what INTUIT has been doing with AI, well, I'll remind you what happened last quarter. They actually let go 10% of their workforce and are reallocating that capital to spend on AI-driven expenses. So moving on forward into the earnings release right here, let's go through a few of their numbers and you will see, guys, they are very, very strong. I was not expecting anything less from such a legacy company. So their full year 2024 results, take a look at these numbers right here. Revenue up 13% on the year. Operating income up 16%. So not only are they growing revenue very nicely, they're improving efficiency even faster than they're improving revenue. Very good. At a nice 18% beat here on EPS, returning a lot of capital to shareholders in the forms of dividends and a few share buybacks. And now take a look at the most recent quarter that we had. Quarter over quarter, right? Measuring against Q4 of 2023, 17% bump in revenue, 16% bump in operating income, and a 21% bump in earnings per share. Extremely strong numbers, guys, from INTUIT. Let's take a look at some of their business segment results because they have a few different lines of businesses as I was explaining, right? So small business and self-employed group. The small business and self-employed group revenue grew 20% for the quarter and 19% for the year. Online ecosystem revenue grew 18% for the quarter and 20% for the year. This segment did absolutely amazing for them. The QuickBooks segment, right, was growing 17%. That is pretty much for your company expense and revenue management software. Not so much taxes, but really that type of software. Even growth in MailChimp, which is pretty much payments, payroll, capital as well. And total international online revenue grew 11% for the quarter and 13% for the year. So small business and self-employed group, they have it on the lockdown. Very impressive numbers. Here is the consumer and pro tax group. Consumer group revenue grew by 7% for the year. TurboTax Live revenue grew 17% for the year. Absolutely insane numbers here, guys. They have a dominant command on current market share right now. The only thing that could possibly challenge INTUIT's moat in terms of tax software has been in the most recent years, the US government has stated that it may be releasing tax preparation software for everyday people for free. That is the one thing that could possibly challenge INTUIT's moat, especially in their tax division. Still remains to be seen if that is going to be rolled out by the federal government, but it could have an impact, right? Gotta call them as I see them, guys, right? Even with these strong companies, we have to understand what are the possible criticisms or potential things that could impact the business, right? Credit Karma Group. Credit Karma revenue grew 5% and 14% for the quarter. So 5% for the year, 14% for the quarter. Extremely good, driven by strength in auto insurance, personal loans, credit cards, and Credit Karma Money. Obviously, this has to do with pinging people's credit scores, right? It's a very nominal charge, but if you do it enough times, it generates a significant amount of money for the company. Now, in terms of their capital allocation, so as you saw, all of their lines of businesses, guys, operating at full power, no red flags whatsoever. Now, in terms of their capital allocation, take a look at their balance sheet. Total cash and investments balance of approximately $4.1 billion and total debt of $6 billion. So balance sheet is definitely not a problem for them. Extremely solid numbers by INTUIT. Now, let me just check on something, guys. My bad. I think I had my microphone a little bit too high right there. Let me know if it's better. Now, they also repurchased $2 billion in stock during fiscal year 2024, and the board approved a new $3 billion in repurchase authorizations, giving the company a total authorization of $4.9 billion to repurchase shares. Now, INTUIT does do buybacks. I wouldn't say it's as strong as some other companies out there, because sometimes when they don't do buybacks, guys, their share-based compensation kind of starts diluting the stock price ever so slightly. I wouldn't say it's too much of a problem. Stock-based compensation is only about 12% of revenue, so it is within the standard of software and technology companies, but still, it is noticeable, guys. They haven't really been dropping their share count that much, and if we take a deeper look into the report, you will see why. So you just noticed they said that they repurchased $2 billion of shares outstanding throughout 2024, right? Well, that's all good and everything, guys. However, the only problem with it is the fact that they also issued, right? They issued almost $2 billion in stock-based compensation. So when you buy back $2 billion and then you issue a new $2 billion, that's what ends you up with kind of flat year-over-year shares outstanding, right? So no real movement there. But at least they will be doing more in the future, which should outweigh the amount of compensation that they do, especially with those new approvals on the table right now. Now, moving on further, guys, in terms of the forward-looking guidance, here's the other portion of their beat. They gave very good numbers. So here's the numbers for full fiscal year 2025. So revenue growth of approximately 12 to 13%, which is standard for the company. Very solid numbers. Operating income right here, we're going to use non-GAAP, just because it excludes any one-time events such as the layoff of those that 10% of the workforce, which was a roughly $235 million cost this year, and there will be more restructuring costs next year. So to just streamline everything, we'll take non-GAAP just for this report. Growth of approximately 13 to 14%, very good. Non-GAAP diluted earnings per share, growth of approximately 13 to 14% as well. So growing all metrics, guys, in their full year guidance for next year, very good and in line with company standards of revenue growth of between 10 to 12% per year and EPS growth anywhere between 13 to 15%. That's been the standard for INTUIT at least over the last 4 or 5 years. Now, in terms of your segment breakdown, the company expects the following segment revenues for fiscal year 2025. Small business and self-employed growth of 16 to 17%. Fantastic. Consumer growth of 7 to 8%, similar to what we had this year. Pro tax group 3 to 4%, and Credit Karma 5 to 8%. All of these are roughly in line with what we've had this year, just a tiny little bit better, just to show that the company is still growing, right? That's pretty much everything that we had in terms of the company breakdown. The one last thing I did want to show you guys is the free cash flow, because this company is an absolute free cash flow monster. Here is your net cash provided by operating activities for the quarter, $4.8 billion. You take away your purchases of property and equipment, and you're left with a cool $4.6 billion in free cash flow for the year, which is a substantial number for INTUIT. Here's your progression on INTUIT's free cash flow. As you can see, it just continues to go up, and that $4.6 billion should be sitting right on top here with last year's numbers. But as you can see, absolute free cash flow monster. It allows them to improve their dividend and also improve their buybacks for shares. So extremely solid company here, guys. Now let's jump into the valuation. Obviously, we know that the balance sheet is not a problem. So let's just look over it real quick. We saw it in the earnings call, but just to show you, debt versus cash and free cash flow that they generate, guys, is really not that substantial. So no problem on their balance sheet whatsoever. Very, very solid. Look at their growth too. EPS growth over the next foreseeable future, very stable, very consistent. Revenue growth over the next foreseeable future, very stable, very consistent, at least for the next 3 years as well. So in terms of the valuation here, guys, let's get a few numbers out of the way. So they do grow revenue at 11% per year, roughly. EPS growth at about 15% per year too. Now that gives them a 2025, because we just wrapped up 2024 for them. So 2025 forward PE at $686 right now. Well, they were a bit lower as a matter of fact. So let me just redo this number right now. I think I did that right prior. So let's do them with after their share price decline in the after hours right now. So if we were to do, let's say 652 divided by your 1910, gives them a price to earnings of about 34.1. Doesn't change it that much, but still. And then we divide that by their 15% EPS growth rate for the PEG, and they get a PEG of a beautiful 2.27. Now, in terms of the valuation for this company, guys, all the metrics are relatively high. The forward PE is relatively high in relation with their standard. If you want me to bring it up here, guys, I think I could do that right. Oops, that's the wrong button. Let me just pull it up real quick. So PE ratio history, guys, as you can see, right, it is very high on a trailing basis. Now, moving forward, their forward PE is a very cool 34.1, right? So at a first glance, it does appear like a high number, but in terms of their historical standard, we're actually under the expectation right now, which does give the company room to grow over the next year at least. Now, in terms of their PEG ratio, guys, 2.27, which is a little high, but a lot of these legacy companies or these high free cash flow monster companies that give very good return on capital employed or return on invested capital, they will always have relatively high PEG ratios, guys. You see that with Microsoft a lot too. It's just these companies are so predictable and so consistent that Wall Street gives them higher valuations for that predictability, right? And then the free cash flow yield at 2.3%, it is admittedly a little bit low. You'd want to see this number between 3.5% to 5%, which would require them to have a little bit of a dip, to say the least, right? So as of right now, guys, I do believe that INTUIT right now is fairly valued. It's not undervalued. It's not excessively richly valued either. I think it's really just right in the middle. And plus the fact that we're in a beautiful monthly uptrend here, guys, this is a monthly cup and handle. It looks extremely good for a breakout to the upside. So in the event, guys, right now we're sitting about 652-ish. If we were to retest the lower bounds right here, let's call it 630 down to 625. I've been calling this a few times on the channel in the most recent couple of weeks, was a screaming buy down here. And I do think that they will be able to break this trend to the upside, if not by the end of 2024, at least through 2025. I would not be surprised if sometime in the midpoint next year, this company is sitting anywhere between $750 and $800. So there is a lot of upside, and I will be looking to trade this one myself. Even for a long-term portfolio buy, guys, I would be willing to add some into it here, but I would not go heavy. For that, we really would need to wait for a more significant dip, right? Like we got back here in the month of May or June and retesting lower ends of ranges. Very rarely do I want to add companies to the long-term portfolios if they're pushing all-time high metrics right now. So that's pretty much everything I have for you guys for INTUIT. Hopefully you guys appreciated that. Now let's jump right into our analysis of the indexes, right? So moving into SPY, we knew what we were expecting, guys, and I was telling you guys all to keep an eye on what time frame? The 1 hour time frame, because we knew that ever since we pretty much bottomed all the way back here, right? This 10-day monster rally, we never lost the hourly uptrend, and more than that, we very rarely lost the 12 EMA in a significant fashion. And then enters today. You can clearly see it, right? Big loss of the hourly time frame. Still no hourly downtrend in motion, but the loss of this significant size plus the loss of the 12 EMA, guys, leads us to believe that our daily consolidation is definitely underway right now. So the bulls just seek to set some possible daily higher lows. And as we've been saying in previous videos here, guys, where could they possibly set the daily higher lows? Well, we might be looking for an inverse head and shoulders. So that could possibly bring us down into this location back here again, right? Think 550 all the way down to about 540. This little location, all the moving averages are right there. And you do have a big level of support down here as well. I would not be surprised if this consolidation does continue, that this area is kind of where we end up. On the weekly as well, the weekly is looking very good. So we were in a weekly uptrend. The loss of the weekly uptrend, and now the bulls have a huge bounce and are trying to get it back. So if we cannot get this weekly uptrend back by simply smashing through the all-time highs and a massive V shape, we may just have to do a two-step recovery process, which would entail eventually resetting the weekly higher lows a bit lower and then going for the trend change possibly in the month of September. But be very careful, guys. As I've always said in the past couple of weeks, right? August and September are known to be very weak for seasonality. September is going to be a very big month. Not only do we possibly have rate cuts on the table, but we also have a lot more data from the jobs, from the economy side of things, right? So all that negative data plus rate cuts could be very volatile for the markets. And then we obviously have the election uncertainty too. So September should be a very interesting month. If we do get a small retest down here, guys, I would not be surprised if it is definitely a buying opportunity for possibly higher highs later on in the year when we resume more favorable seasonality in the later part of October, November, and then December as well. Now moving into the QQQs, QQQs also pretty much same analysis as the SPY, right? Pretty much stair-step pattern of higher lows every single day. Look at these higher lows, right? Every single day higher lows. And then today we broke that series of higher lows. We also lost the 1 hour time frame in a significant fashion, coupled with a big loss of this 12 EMA. So daily consolidation is definitely underway right now. We'll see what happens tomorrow, obviously with Jerome Powell and Jackson Hole. But as a whole, what we are expecting, guys, is pretty much just a retest, right? Just looking for a higher low, anything above 423, looking for a daily higher low for possible further trend continuation. Where can we bottom out? This area seems to be a nice area to retest as support. All your moving averages are there, and you do have a short-term support area as well. This is 467 all the way down to roughly 456. So we'll also be looking for the possible inverse head and shoulders on the QQQs. Healthy consolidation for now, guys. I would not be too worried because we know we have a significant bounce and the weekly timeframes are also looking quite good. So in the event that this is the top of the weekly move, I will remind you, this weekly bounce was very good. We got all the way almost to 78% retracement, which does give the bulls a very, very solid chance of resetting this into a beautiful weekly uptrend. If they can't get it done in one straight shot, just have to do it in a two-step recovery process. Moving into financials right now. So financials actually performing quite well, and it really looks like they kind of just want to bull flag and break the all-time highs. We're literally right there right now at about 44.10. So in the event tomorrow is a green day, we will have new all-time highs and your daily uptrend simply continues. In the event we roll over here, guys, double top and roll over, it would actually be a new daily downtrend on financials, and we'd just be looking for weekly consolidation. I'll remind you, we never really lost the weekly uptrend on financials, right? Higher lows every single time, higher highs every single time as well. So in this case, we just probably be looking for a weekly higher low for possible further trend continuation. I would not be too nervous about financials at all. And my favorite names in financials, you guys must know it by memory by now, Visa and MasterCard, still at relatively good valuations and good levels to be picking up for a long-term portfolio, especially Visa, guys. These look amazing on the monthly, right? Just simply a monthly retest, right? Monthly higher lows for further trend continuation. And MasterCard is the exact same thing. Monthly higher lows are set, looking for further trend continuation. Moving into healthcare right now. So healthcare also performing very, very well today, right? Up 0.06% and really just a straight shot move to the upside, looking extremely strong. In the event, however, we roll over with the SPY and the QQQ. So you can see healthcare actually did do the same thing. They lost the hourly time frames, right? So we lost the lows right here, loss of these higher lows, but we did not set up for the hourly downtrend, right? So no lower high and lower low in place. And now the bulls are trying to recover this almost entirely. So we'll see if they're able to do it here, guys. But one thing's for sure, if they are not, and we proceed to move to lower lows on the hourly time frame loss, we're just going to be looking for an daily higher low for possible further trend continuation. Where could we maybe be targeting, guys? Well, the all-time highs are now a bit of a ways behind us, 151 down to about 150. So I would tag probably the first level is going to be your 12 EMA up here at about 152.50. In the event we roll over the markets in a more significant fashion, then we're probably just going to be expecting a weekly higher low. Look at this gorgeous weekly uptrend right there. No red flags for the bulls whatsoever. Any drawdown on the weekly, just going to be hunting for that weekly higher low for possible further trend continuation, guys. And that level on the larger weekly level would be down here, 151 to about 150. Just keep an eye, guys, on the ones that I've been looking out for. UNH is looking very good, trying to form a new base above prior all-time highs. If we get a slight retracement down back into this level, 551 down to 531, could be a great breakout, retest of the range, and then possibly run. I'm in a few other names as well. I am in Merck. Merck has been doing pretty good now. We have the daily uptrend back. So we got into Merck pretty much down here in this level right here, right? Now we're just looking at to ride to pretty much the 120, 122 level up there with our stop losses below the lows right here. And we're also in MCK, McKesson Corporation, also nice new daily uptrend. We have also curling MACD levels on the daily, so looking good for a little bit of a rebound. We picked up this trade pretty much in the midpoints right here. Stop losses are below the lows, and we're just pretty much targeting overhead resistance at about the 575 area. So decent little trade going on healthcare. Usually McKesson does not have these types of drops if you go back in their history, right? So this one was a little bit of an anomaly, and I liked it because we almost tagged the 200 daily moving average coupled with daily oversold conditions. So those two trades in healthcare are moving quite nicely right now. And the other one, which was phenomenal, and I advertised it for a number of days on the channel as well, was this infamous breakout retest on the weekly, right? So AbbVie coming down here, break out of this range of support, huge previous resistance, which is now support for the markets, breakout, retest, and massive run. This little entry right here was a golden trade opportunity. So hopefully you guys were able to take that one with me as well. Healthcare's been doing good. Now moving into IWM Russell. So IWM, guys, selling off also a little bit today, 0.88%, or sorry, we're not going to do the Russell just yet. We have to do SMH. So SMH pulling down significantly, 3.28%, but that's okay. They've created a lot of space here, guys. Got a lot of space to work with. And we were talking about the fact that we were entering this period of resistance. So no surprise that the bulls got a little bit rejected right there, right? So what are we looking for right now? Looking for a daily higher low. Anything pretty much above 211, looking for that daily higher low for possible further trend continuation. A big impact on this ETF is of course going to be NVIDIA earnings next Wednesday. So what I'd like to see from this index is find some support in this lower green box right here, 238 down to about 225. Big previous resistance for the markets stands to argue that if it was support here, it will also be support as well. And we are also looking for the possible inverse head and shoulders on that SMH ETF. So any retest in this location could be a nice lottery swing trade opportunity, guys. I wouldn't go too heavy on it because markets are still uncertain, but does look like a very decent technical setup, especially on individual names, right? I like TSM, I like ASML, I like Micron as well, but playing a little bit conservative. NVIDIA, AMD, all names that I'm willing to play in the next few weeks if ever we do come down further into this location. SMH looking pretty good. And in terms of the weekly bounce here, guys, we know that we lost the weekly uptrend, of course, and now the weekly bounce has been fairly nice. So we do have a lot of space here, guys, 61.8% bounce. So it does create a lot of space for the bulls to eventually reset this into a weekly higher low and try and get this weekly uptrend back over the remainder of the year. Moving into the Russell right now. So Russell down about 0.88%, but not really losing the lows, right? So the Russell still trying to hold on to any and all gains that it can. You can see this chart is kind of very messy right now. What we're going to be watching out for, guys, is just in relation to the SPYs and the QQQs, right? The Russell is not going to be able to move on its own. If we see further index consolidation on our SPY and QQQs, expect the Russell to pretty much follow suit. And thereafter, guys, we're just going to be looking for a daily higher low, anything pretty much above 204, just looking for that daily higher low for possible trend continuation to the upside. Where could we maybe retest to the downside, guys? These two big yellow lines right here, 210 down to about 208. Big prior resistance for the market all year since January, should prove to be some decent support. So we'll see if the bulls can hold it up and maintain this daily uptrend, or if ever they have bit off more than they can chew and start retesting the lows, right? I'm still not playing this one, still being a little bit careful, at least until those rate cuts. And now lastly, the Dow Jones here, guys. Dow Jones performing quite well, 0.43% to the downside, but not losing too much. I'll remind you what we were looking for, guys. We were looking for a loss of the hourly trend, as you saw right today, and a loss of the 12 EMA in a significant fashion. Both things happened today. So we are hunting for daily higher lows on the Dow Jones right now. Anything above this guy right here, 39,250, just gonna be looking for a daily higher low for possible further trend continuation. Now, if we pull back a lot, we may be able to retest the previous all-time highs right here. Well, before these ones, of course, right? But at one point, they were the all-time highs, and that would be right around the $40,000 mark. Could be a very nice retracement to set up for a possible retest of these all-time highs. And you guys can see it as well, right? Possible inverse head and shoulders on a lot of these indexes. We will see if the bulls are able to execute on those gorgeous patterns that very rarely form on indexes, especially inverse head and shoulders, guys. They're usually a high probability pattern and very rare to see it form. So weekly also in a beautiful uptrend. In the event we are unable to break the all-time highs and triple top right here, the bulls do have a significant amount of space, guys. Anything above 38.5, just gonna be looking for a weekly higher low for possible further trend continuation. That's why I like maybe a retest of your prior all-time highs. Could be a good location for the breakout, retest, and possibly run. That's pretty much everything for your major and index analysis right now. Now let's move into a bit of our big tech names, shall we? So moving on into Apple. So Apple also with a significant red day today. Stark contrast in relation to the last 12 days of trading. And I was telling you guys, just take a close look on the 1 hour time frame. Possible loss of the 1 hour trend, right? So we know that Apple lost it right here, but they did not move any lower, right? We were just able to kind of recapture that right away. So we'll see if one day of trading leads to any more downside, but this loss arguably is a bit more significant, right? More of an engulfing move, possibly looking to come back under, right? Here, we did not move under all of your major moving averages that much. We still held the 50 and we did not have much of a cross. Now we have a cross of the moving averages below the 50 as well. This one kind of looks more real. So in the event we get an hourly downtrend after this, just going to be looking for further daily consolidation. Very normal for Apple. I mean, after 10, 12 days of green in a row, very perfectly normal. Anything above 196, guys, going to be looking for a daily higher low for possible further trend continuation. I would pay special attention to how Apple reacts from the support zone below us, 219 down to about 215. You'd really like to see them hold that, guys. because this is a big area of support, and they would also be looking for that inverse possible head and shoulders, usually a very bullish pattern. In terms of the weekly, guys, weekly Apple, no real red flags whatsoever. They lost the weekly uptrend, but now we have a significant bounce, right? The bounce size is very good, up to about 80%. So it does really give the bulls the best chance possible at resetting this weekly uptrend in maybe 2 steps, right? If they're not able to completely V-shape this, they can possibly reset it in just 2 short steps. So looking forward to see how they're able to do that. Now, unfortunately, guys, I will not be playing Apple much above the 205 down to 200 level. I just think they're too expensive right now, and I do not want to get trapped at higher levels. If ever there's some further revenue growth fears on Apple, or if ever their AI releases are somewhat delayed, I do not want to be impacted by that negative news. Call me too cautious, but I mean, I have long-term shares of Apple in my long-term portfolio, no problem there. But in terms of trading it, guys, I just don't see the best value up here. I would personally like to see more of a retest of former all-time highs, which would be 205 down to about 200. We'll see if we get them. If they don't, unfortunately, I will be left away from this trade, but that's just how I'm seeing playing this company as a whole. I don't really trust it up here, guys. Now, moving into AMD, give me a very quick second. So AMD also down significantly here today, 3.87% to the downside, one of their largest red days in about 10, 12 days of trading, but that's okay, guys. They did create a lot of space, right? So a little bit of a breather is quite normal and to be expected. We were commenting on this big resistance area, 163 down to about 154 was a huge level from the past. Big weekly support right here, huge area of congestion. So now again, would have been very challenging for the bulls to just blast through this without it looking like it was there at all, right? So now we got rejected from it. What are we looking for, guys? Anything above 128, just looking for a daily higher low for possible further trend continuation. Now we have a couple levels coming up. Short term, we do have the moving averages right here. The 200 is sitting just below us at about 150. And then the larger area of support really starts down here, however, 142 down to about 137. Now, obviously, if we come all the way down here, the bulls will be giving back significant gains, and then you might expect possibly a tightening range. I think this one will probably move very well with NVIDIA's earnings, but I would not like to see them cut too deep into this move, guys. If you give back too much of your momentum, you just end up at best with a tightening range, and at worst, you end up possibly retesting the lows, right? So they really need to keep the size and magnitude of this drop under control. One thing for sure though, guys, if we come down a little bit lower, start testing the 148s, 147s, I'll be looking for short puts possibly next week in the mid 130s range. I really like it down there as a whole. This stock is looking very, very good. Unfortunately though, guys, just got to call it how it is, right? We've lost all the time frames. Monthly downtrend right now, still in weekly consolidation, no confirmed weekly uptrend just yet. And the daily is the only thing that the bulls have now secured. So we need to put in a lot of work to get those higher time frames back. But I like this company, guys, especially down here for some short-term swing trades. I like it a lot. Moving into Amazon right now. Amazon also with a heavy day of red. Most of big tech really consolidating today. So Amazon, their first significant day of red. Obviously, guys, you know this, right? Hourly trend severely lost. Moving averages as well, severely lost. So in the event they continue this hourly downtrend into tomorrow's session, we are possibly going to get finally some buying opportunities on Amazon. This is the retracement that I've been looking for. After pretty much an almost 80% engulfing move, getting rejected at our previous area of resistance after filling the earnings gap, we are now looking to possibly reset a little bit lower. And I'll be on the watch here, guys, for these levels right here. 170 down to about 165, slightly at or below the 200-day moving average, and right where the price reacted the most right here after the most recent earnings, before the Black Monday, of course, and then obviously last earnings and the earnings before that. So this whole 170 down to about 165 region is where I want to be positioning some of my trades for the foreseeable next couple of weeks. Think short puts in that area, right? 170 down to 165. Think it's going to be a great buying the dip opportunity for Amazon, hunting for a daily higher low, possibly for further trend continuation. On the weekly, guys, the weekly bounce is also fairly decent too. The bulls have a good chance. They bounced 61.8% of the move, so we might just be looking out for a weekly higher low for possible further trend continuation, which is why I like the lower bound right here. 170 to 165 is the location for me for looking for some short puts, some maybe put credit spreads. If we come down here, you'll get some put credit spreads all the way in the 150s, and maybe even some call debit spreads with a few months of time on it if we end up in that region down there. Moving into Google right now, Google also coming to the downside, right? 1.28%. Google still trying to hunt for its daily high or low. So we are in daily consolidation already. Daily uptrend is clear. At this point, anything above 159.50, looking for that daily high or low for possible further trend continuation. Would not like to see Google lose too much of this move, guys. If we retest these lows, it comes dangerously close to allowing the bears for a lower high into lower low and just rolling over this weekly chart. I will remind you, Google's bounce is arguably one of the worst bounces in all of big tech. The weekly bounce only got up to about 38%, definitely not strong enough. And if the bears come back roaring with a vengeance in the rest of these markets, guys, I do expect the bulls to kind of lose ground here, maybe retest the lower 156 and maybe all the way as low as about 150, all the way down to about 145. That's really where the larger areas of support kick in for Google. And in the event that's a possibility, if we come back to these previous lows, guys, in the low 160s to high 150s, I will definitely be looking to write short puts under that. Think 155 down to about 150. Put credit spreads will probably be open between 150 and 145, and maybe even some longer term call debit spreads if we really come down hard into this location. I'll be looking to pick up Google. Nothing wrong with this company at all. Just right now, just out of favor as with the rest of tech stocks pretty much, right? I mean, they have bounced, but still they're weaker than a lot of other names in the market right now. And the fundamentals of this business are absolutely fantastic. So there's some really good value at even buying Google at these levels. I like it for a long-term portfolio add, but I'd be going small, right? Maybe you add a little bit here. If it drops you out a little bit more, if it drops you out a little bit more, and that's pretty much how we just dollar cost average into building a very beautiful position in one of your best companies in the world. Moving into Meta right now. So Meta also, after putting in a new all-time high on the day, unfortunately retracing and giving back most of those gains, but they did have a new all-time high. So congratulations to Meta bulls out there. What are we looking for on Meta specifically here, guys? Well, let me just remind you what we are dealing with, right? We had overhead resistance. We've now blasted through it. We will see if the bulls can maintain this area as support. Usually you want to see the bulls give a bit more space to kind of be able to use this area of support better, because if we only poke our heads above it, guys, sometimes it's just not enough and we can get rejected, right? They tried a few times and got rejected. You really need to see them clear it and then be able to retest it. Then usually they have a better chance of maintaining that. As of now, still in a daily uptrend. Just be mindful, if we lose these lows, 524, you will be losing the daily uptrend, possibly getting back into a daily downtrend, and maybe just going into a little bit of weekly consolidation. No red flags for Meta though. They do have a ton of space, guys. Anything above 448, just looking for a weekly higher low for further trend continuation, possibly beyond the all-time highs. I like Meta right here. And if we come down, let's say back under 500, let's say 495, 490, I would not be opposed to writing put credit spreads below the lows right here, even short puts if you have the capital to do it. And if we ever, for which reason, guys, come below there, 475, 465, again, let's say we have a big market sell-off, I will be looking to add long-term portfolio Meta shares here and maybe even some call options with a few months of time. Moving into Microsoft right now, Microsoft also down a ultra rare 2%, right? So Microsoft obviously only has your 2% days when the entire market is falling apart. But today they had one of the worst days with Amazon, right? Across all of big tech. So Microsoft coming down now. What are we looking for here, guys? Well, Microsoft actually, right? Possibly losing the daily uptrend. So unfortunately, Microsoft set the daily higher lows right here, trying to push up in this big area of resistance, guys, and it was a big one, right? Big overhead resistance, 436 down to about 423. Unfortunately, getting rejected right there, which is pretty much the expectation that we had, and losing the daily uptrend. So now we are possibly looking in for some weekly higher lows. But take a look at the size of the bounce on Microsoft on the weekly, guys, and it also was not the best amongst the group, but still not too bad. 50% bounce. So the bulls do have a chance right now at resetting this into a weekly uptrend, but they will need to defend this support level below us with their lives to make that happen. This is 405 down to about 390. I really like Microsoft as close as we can come to this location, guys. I think it's a great opportunity to be adding some long-term shares in the company and even some swing trades too. If we come into this location or very close to it, think of writing some maybe put credit spreads below it, and possibly even some short puts if you have the capital as well. Tremendous company, guys, just going through their normal price action, right? We had a great daily uptrend rally right here. Now we're rolling it over, and in the event we roll over further, just looking for a weekly higher low for possible weekly uptrend shift back to the bulls, right? This has happened a few times in this location where we've lost trends and then we're able to recapture them. So we'll see if Microsoft can do the same thing this time. Extremely solid companies, no red flags. Moving on to Netflix right now. So Netflix, pretty much after putting in a new all-time high just a few short days ago, are already in slight consolidation mode. So beautiful rally to the upside by Netflix, looking for a daily higher low. Anything above 586, just looking for that daily higher low for possible further trend continuation. Netflix displaying such strong qualities right now. If we come down, there's a few levels that we can kind of base our support levels off of. There's this first one right here, 690 down to about 678. That is your previous range of your all-time highs. If, however, we break a little bit below that, keep an eye on weekly levels here, guys. That's going to be 650 all the way down to about 630, right? Netflix is just looking probably for a weekly higher low for possible further trend continuation. This, if they do pull this off, guys, would be a cup and handle formation on the weekly, usually a very bullish pattern for continuation to the upside. So looking forward to possibly buying the dip on Netflix. Gonna be a little bit patient here though, guys. I would like to see them retest the 650 to 630. Not quite sure if we get it, but if we do get it, guys, I will be waiting there with some possible shares. Moving into NVIDIA right now. So NVIDIA down about 3.7%, getting a little bit of that back in the after hours right there, but not looking too bad in the grand scheme of things, right? They do have their earnings next Wednesday, so we don't really have many trading sessions left before then. 4 whole days. So in terms of the upside right now, we knew we were in a daily uptrend, and we know that a daily consolidation was possibly a factor prior to their earnings. So as I was saying, in the event we come back down 119 to 115 over the next few short days of trading leading into the earnings, guys, I will probably be making a play, right? Daily uptrend, looking for a daily higher low, big area of support. The moving averages are there too. So if we do get a retest of this range, guys, I may throw a few call debit spreads at NVIDIA for their earnings. They're going to have a couple of months of time on them, of course. I'm not going to be playing weekly call options, right? The volatility is going to be way too high. So I'll probably be playing a combination of maybe short puts all the way down here, maybe in the lower 100 range, and maybe even some call debit spreads with a few months of time, looking for that breakout capacity, right? I'll remind you on the weekly, it was a weekly downtrend. The bulls now put in a heck of a bounce, guys. This was pretty much, you know, in excess of 85% worth of a bounce. So the bulls do have a great chance, even if earnings are underwhelming, and we come down, they have a great chance of resetting a weekly higher low and possibly then resetting the weekly uptrend later on in the year. We also have a huge level below us, guys. If earnings take us down into it, 105 down to 95 is a very big level. I'd be highly surprised if the bulls lose that after their earnings. I do think their earnings will be well received. Moving into Tesla right now. Tesla, big red day to the downside, guys. 5.65, but still in a daily uptrend, looking for a daily higher low. Anything above 191, looking for that daily higher low for possible further trend continuation to the upside. I'll remind you guys on the weekly, what's doing us damage on the weekly, guys, is we were in a weekly uptrend and then the bulls gave back almost all of this entire move. So your momentum for the bulls right now is very weak. I've been saying this ever since we lost this move, guys. Probably the most expected scenario is just going to be a tightening range for the foreseeable future, right? So the way I'm going to be playing Tesla, guys, if in the event we retest these lower levels under 200, let's say 200 down to about maybe 190, the lower end of this range, I'll be looking to maybe write some short puts or put credit spreads about 175 and lower. This is the area that I want to target to center my plays on Tesla around, because it's a much more solid level, as you can see in the most recent year of trading price action, right? So the bulls are still in control of both the daily and the weekly timeframes, but this company does have its challenges ahead of it, which is why I really want to be very conservative with my moves on Tesla right now. As a whole, their bullish momentum, guys, is completely dead, right? The size of this bounce was pretty good from the Black Monday crush, but still, guys, it's going to take a lot of bullish news on Tesla to get us all the way up there, and I don't think they have it much before the robo-taxi event in the month of October. So I will be looking to play this consolidation, but I have to get a good price, guys. I have to be able to write some short puts down here in maybe the mid 170s, because I do not want to be assigned too close to the stock, and then we revisit that location, right? So I got to be playing this one a little bit more careful than usually. Now moving into Palantir also down on the day, down about 2%, not that bad of a day. They did set a new 52-week high prior to that though. Palantir still looking extremely strong. So we know obviously that we're in a massive daily uptrend. They're trying to set up for the daily bull flag to move higher. The next level of resistance is pretty much all the way up to about $35, $36. But in the event we roll over with the rest of the markets, keep in mind, it's been a heck of a move, right? That is literally almost a 40% move on Palantir, right? More than that, 52% move in just 2.5 short weeks of trading. So definitely a huge move to the upside. Daily overbought conditions. We were pretty much almost 4-hour overbought conditions as well. And now you can see kind of losing that 1 hour as well. If we roll over under all the moving averages as we are right now and roll over, you guys understand that daily consolidation is going to be underway, and they're looking for a daily higher low, anything above 2150, looking for that daily higher low for possible further trend continuation. A more likely scenario for Palantir, especially after this massive significant move and slightly being overvalued right now, is we might possibly lose this daily uptrend and go into a longer form consolidation. That would just be looking for a weekly higher low for possible further trend continuation. So in the event we get a few weeks of consolidation here, guys, I'm possibly looking for the retest location, $29 down to about $28. If we revisit that, it'll open up a ton of short put opportunities below 27 down to about 25, and even maybe some swing trades if you want to go with shares or call debit spreads. If you want to actually play the retest and think that they're going to hold it, that could be a very good trade opportunity as well. So Palantir looking very good, but I will not be chasing it up here, guys. If anything, going to wait for the retest. So that's pretty much everything we had for our stock analysis rundown today and our earnings. Hopefully you guys enjoyed that. Now let's dive right into our portfolio. So let's dive into the portfolio right away here, guys. In terms of my trades for today, well, the earnings plays, they did not play out the best as of yesterday. We actually ended up losing money on the plays we made yesterday, but it really wasn't that bad, guys. Across the 4 or 5 earnings plays I took yesterday, a lot of them came down significantly, and we only lost a whopping $38. So it wasn't that bad of a day, guys, but still did lose in terms of realized gains and losses. That is how much we lost on the day. So you can see here, we closed a lot of trades early on in the morning. Toll Brothers was just a stagnating trade from 2 days ago. We finally were able to take the profits on those, 95% profits. SoFi as well. I forgot I actually had a buyback limit order on these. We collected most of the profits, guys. We got these for about $5 each, closed them for about $1. So in all intents and purposes, guys, we made about 15 bucks on this trade in 2 days of trading. 15 bucks may seem small, guys, but it's the ROI, right? This was 0.5% in 2 days. Very, very good. Now, the ones we did lose on was AAP. So unfortunately, AAP came down. We weren't at jeopardy of really being assigned, right? So it did come down a lot. This one was down almost 20% on the day, as you can see right here. And our strike price was right below that at around the $48 mark. Now we came down early on in the morning, guys, and tapped it, right? This is prior to the open. And then by the time we opened, we were at least a little bit higher. So I really closed these trades at the open at the 52 mark pretty much, but the damage was done across the contracts. They came too close to our strike. So we had to close these for a very tiny loss. As you can see, the first one right here, we had 2 of them, one for this Friday, August 23rd, and one for August 30th, same strikes, right? One of them, the one for this Friday, we wrote for 17 cents. As you can see, we closed it for literally the same amount, right? So no loss on that one. The loss was really on the longer dated contract for next week. So as you can see right here, let me just pull it up. So we had the $48 puts for August 30th. We got them for 39 cents in credit. And then unfortunately, we had to close them this morning for a slight loss here of about 65 cents. So just about like a $26 loss on those. Not that big of a deal as a whole here, guys. Then we did some good trades on Baidu. So we were profitable on our Baidu trade for earnings that we did. As you can see, the $81 puts were closed here for about 4 cents. I forget how much we got on them yesterday because there was way too many trades. We got about 27 cents on them. So very decent trade on Baidu. I'm happy with the way that one went. So good profit there. We took a loss on NTES, however. Take a look at this one right here. So we bought them back for $1.10, but yesterday we wrote them for significantly less, right? Wrote them for 30 cents cents in credit, and unfortunately we had to take an $80 loss on this position, guys. NTES, although we were 2 standard deviations away from the move here, guys, the problem with these contracts was that I got a little bit greedy and I went for 1 week out because there was more premium. Had I gone possibly for this week's strikes with less premium, perhaps I would have been able to make it out of this one, because when the market opened, truly, we were maybe in the $86, $87 range, and we did a lot of time left on, where we could have taken profit, right? Pretty much right at the open right here. You can see we're right around $85. So I probably would have been able to close them maybe a bit more break even, but the fact that I still had a week of time and that we were kind of close to my assignment strike, well, that's what really made the contract bleed quite hard. So close it early on in the morning, and good thing I did, because after that, the contracts were even more expensive, right? So a little bit of a loss there. As I show you guys all the wins, all the losses, right? Snowflake, this one was a win too. We got about 30 cents, as you remember yesterday. Closed them for about 10 cents. Could have waited a bit more maybe, but then again, these were for next Friday, so I closed them right away. Wolf was pretty much a very good trade as well. That's, pretty much 90% profit, 85%. Urban Outfitters as well. That was an 85% profit trade. The other Baidu contract, that also was a decent win. This one was for next Friday. So you got some decent gains on those Baidus. Let me see if I can find you the Baidus for the next week's expiry. So these ones were right here, 70 cents. We closed them pretty much today for, let's see if I can find it again, the Baidu 82s for 42. So we realized about, just under 50%, but that's okay, guys, especially when Baidu did actually drop today. I was just happy getting some profits on these. And then we took, unfortunately, a rather large loss on CSIQ. I mean, it wasn't that bad for all intents and purposes, right? We closed at 12.5s for 26 cents. We closed at 13s for about 50 cents. So all in all, guys, the total loss right here was this $120 minus the credit received. Credit received was about 40 bucks. So we once again lost about $80 on this position on CSIQ. CSIQ unfortunately came down right into the 2 standard deviations of the expected move, sadly for us, and really closed below both of our strikes. So I was lucky enough, I mean, this is the strategy, right? We closed them early on in the morning at this pop right here above the 13. At that point, the contracts were already too close to our strike prices of 13 and 12.50. So I had to take a loss, but at least we didn't wait too long to close that loss. So little loss nonetheless. I did make a little bit of profit here on my SQQQ calls. Nothing to scream home about, guys. We got these for 16 cents and closed 2 contracts for 24 cents each. So, I mean, what do we make? Like 16 bucks, right? But it helps to offset all these tiny little losses that we took on earnings, of course. And then that's pretty much everything for the positions that we closed here today. So we pretty much, all in all, across all those earnings plays, a lot of wins, but a couple larger losses than expected. All in all, total net P&L minus $38 across all the earnings plays. So not too bad of a day in the grand scheme of things, but obviously being a red day, all of our long positions kind of took a hit. But I'll show you guys a few of the ones that I opened for tomorrow, and then we're going to end it right there. So the ones we opened for tomorrow were the Airbnb 113 puts. I mean, I've been looking for Airbnb to drop all week pretty much, and then finally they gave me an opportunity. The expected move for the week was 113.15. So we'll see tomorrow. I still have a little bit of wiggle room for these shares, but guys, I do not mind being assigned here. This is literally my buy zone for Airbnb. So if we pull into it and I get assigned, no problem at all. This will become a normal wheel trade. And if we don't get assigned, well, perfect. We just collect all of this $18. Very decent premium, guys. I wrote this late afternoon for only 1 day of trading, guys. I mean, if you put this on a 5-day basis, right, 0.18 times 5, that would be 90 cents, and that would respect our 0.5% rule. So very decent premium there. A couple other trades that we did also manage today. We also opened a Bill, a short put play for earnings. We got 17 cents for there. Bill did fairly good after their earnings. No real risk of us being assigned. They're up 5% in the after hours. Well above our strike price. And we went once again 2 standard deviations away from the expected move. $40 was pretty much 21% away from the share price at the close. So we had a wide margin of error on that one. So all these earnings trade I took today are going to all offset the losses that I took today. So all in all, it's been a fairly good week in terms of earnings plays here, guys. The losses have been very small and the wins have been many, right? So moving on to Kava, we have one earnings play for Kava, only about we wrote it for 15 cents, but they charged me $2 in commission. Theft on that one, right? So Kava, $79 puts, we did well on those. So once again, that was a 2 times expected move type of trade. The trade was pretty much going for the $80 strike, right? So that would have been, or even 79, right? 23% almost from the current share price. They're up 9% in the after hours. So we will pocket all of that premium tomorrow on Kava. So looking very good there. There's your 30 bucks, right? So we lost 38 today. Just these 2 trades from today, 30. And then we also did one other earnings play, guys, INTUIT. I wasn't willing to play INTUIT with straight short puts because it's expensive, right? And if ever you get assigned on INTUIT, I mean, I wouldn't mind being assigned on INTUIT, but it does lock away $60,000 of buying power. So I went with some bull put credit spread, right? Only one contract, just looking to collect a tiny bit of premium for tomorrow. 595 versus the 590s. This was more than 2 times the expected move on INTUIT. So I'll remind you, 595 versus 590 would have been all the way at the bottom end of this large range of support. So that's what I've targeted, and we profited pretty nicely on that one. This one should be pretty much worthless into tomorrow. So we'll have more profits there on INTUIT. Now, a few other trades that I opened today, all these other ones are the same. We still have this Google wheel trade right here that I opened yesterday, the 162.5s. They're currently underwater, but we're not yet in the money on these. So we'll see how these expire tomorrow. Would not mind buying an extra 100 shares of Google down here, not at all. Now moving further here, guys, the ones we did open today, NVIDIA, leading into my earnings catalyst trades, right? 117s and the 114s, short puts, both for tomorrow expiry. I got some very good prices, almost the lows of the day early on in the afternoon when we had that second leg of dump. And so you can see the 117s, we got 34 cents for 1 day of trading remaining, and the 114s, which are significantly a ways away from NVIDIA right now, right? So I'll show you guys why I wrote these contracts specifically. So not only does it respect my zone of support right there, but the 117s from where I wrote them, which is pretty much where they are right now, the 117s are an extra 5.5%. So we'd have to have a 5.5% drop on NVIDIA tomorrow. And the 114s for me to get assigned, that would be an 8% drop on the day tomorrow. Now, tomorrow might be volatile with Jerome Powell. It might be a red day, but I'm not expecting that magnitude of drop. Who knows? Maybe I'll be wrong, but I'm pretty confident in these positions. And if I do get assigned, probably going to hold them into earnings. Wish me luck, right? And now that's pretty much everything, guys. The rest of the trades were really here. The only other one that I added was Symbiotic. I added one more contract just because I think these contracts are kind of expensive right now. So we have 3 contracts now for a total of 20 cents, 19.5s. These contracts were trading for 30 cents today. I mean, I know they had a big drop today. They had about a 10.5% drop, but I mean, we're all the way down here at the 19.5. So to be assigned tomorrow, we'd have to drop an additional 13%. I know this one can move, but it's not like we have earnings or anything. So we'll see if we get assigned those positions or whether or not they end worthless. All in all, happy with the portfolio composition into tomorrow. Yes, there's a few tiny little riskier trades like that Symbiotic trade and the NVIDIA for short puts for tomorrow, but I am fairly confident in them, guys. That's why I chose to write them. So that's pretty much everything for today's video. If you enjoyed it, consider dropping a like, would really appreciate it. Also consider subscribing to the channel if you're new. We do these videos every Monday to Friday after the close. So hope to see you back in a future one. And then lastly, guys, if you have any questions at all, please feel free to leave them down below in the comments. Anything you want. If you want me to look at a stock, technical analysis, an options play that you're considering, or just a general macroeconomic discussion, let me know down below in the comments and I'll be happy to answer you, usually within the first 24 hours. So take care, guys. Hope you had a good day. I'll see you tomorrow after the close. Happy trading for tomorrow and peace.